Welcome to TradeTheMBI.com. This is John. This report is for the 15th of January, and well, we've been in the stall mode here right underneath that key 2600. A break above, and I think we shoot easily to that 2650 line. It's interesting because a lot of people talk between this 2600, 2650 is a real danger spot, and you should be worried the market is about to collapse, blah, 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 blah. Well, we're in a weak period. There's no question about that. We've had short-term buyers, though, strong enough to keep price where it is above that 50% line. So it makes it really kind of straightforward. If you dip below there, you can certainly be more to the short side. We came close to it intraday the other day, but as long as you're above that 69.50, then it's an opportunity to attack buy signals as they come in intraday. You can see that we kind of had that rollover from the shakeout, so it is in a really it's a mixed, because you have the broader term weakness from the bigger averages. However, you're still higher DOC reading wise, consistent with where you're at here. Yes, we have fading orange in that like you did in this decline, but you would need to see a big separation of the green to red, and we're not in that momentum phase of dropping. So you've got just the opposite. All that selling is just being countered by new buyers, so not moving lower. And that's usually what creates the big giant jump, because what you'll get is the shorts that have to cover when things move, and that would happen, well, probably not till the 6,700 range, but certainly in between it. Well, of course, that's the NASDAQ. If we go back to the ES, it would be once you break, well, you don't even have to break the high. Once you get into the 2730 range, you're going to start to add to itself, because the people that have missed this early move from December are already behind starting the new year, and that only compounds things for them when they get upside down. It's just the way it works. And the euro still holding quite elevated, under no real auspices other than the idea that the Fed is forced to stop raising rates because of the fragile U.S. economy. Fragile. So that's causing that. Gold is maintaining it because, again, a lot of people are concerned about this mounting debt issue and things, and precious metals will be the refuge, as always. If we look at the intraday, well, it all started with that Asian Open. We had this big drop, and then Trump came out and was talking about his really good conversations with China on trade. And that supposedly is why everyone bought, not just because we had extreme oversold, and when we have these gap downs, they always try to fill back to the high. That couldn't possibly be the reason, even though we see it time and time again. And of course, you can make up any headline you want to justify why technically it does what normally things do when they get hyper oversold in a quick fashion, particularly in low hours. This is why we see big run-ups in low hours usually come back and trace, or the high that's made in the pre-market that fades back right before the open, and then usually they try to come back up to it. And it's just the algorithms looking for imbalances, and they take advantage of it. In this particular case, we had the nice ride-up, put in some positive extremes right around this 2578 algo that we'd had from before, and guess what? Every time we peaked out, came right to it. This took a little longer towards the end of the day. For this one, we just kind of jumbled back and forth, and then boom. And I kept showing images of the 5K that we've been working on with the adjusted pink colors. Went short, obviously the same thing. Produced a buy right down at the bottom. You'll see this new little line with these X's. What that's doing is it's describing a P2 situation where also you have the DOC red has broken out past the previous pivot point of the red DOC. And so in this case, you'd have a pivot right here at this particular spot, and drawing a line across, boom. It doesn't happen right at that signal point. It happens bar later. It's just a confirmation of the trend move. Same thing happened here. The ones just represent from the pivot how many bars it's been, and we allow it to 4 bars after the signal bar. And then there was the X right there confirming that yes, you in fact broke out past this previous pivot point leading to that nice run, which went all the way until we broke the ABM green all the way over there. Then we ended up with, well, these BKs represent the breaks in the market. Not completely finished with that one yet. I have to separate some of the rules for above 15 versus below, because when you apply the above 15 rules to below, you're a little late with some of what are classic steel falling below orange at the same time, cyan rising, and green falling below red. Kind of the, well, it's right here. That's exactly what it looks like. The steel rises above, the orange crosses the green. Well, no, it should be the steel coming from above down below. So that wasn't perfect until this one right here, until the bar next, which it marked. Still, you had most of the action. You had the cyan moving over green, which is very powerful. It has much more strength than even the steel combination. Particularly when we see it like right here, when it's a little early, because you have the rising shakeout, hasn't tapered off, and even now it's right at the edge of that plus 15, so it should start to produce. But once you get that over 0 for the red, yeah, you really need to see that cross back below, or if it moves above 7.5, it would have to cross. Because again, the same thing happens when we're looking for shorts. When you get that rollover, you want that break of that zone, and then the secondary item, you would look for the low pivot right there. And once it breaks out from below that, you would expect it to drop more. And then once you have that, it's amazing. Now, if you do this, you get the low pivot here, matches the high pivot right there. Once this line is broken, so that's the reading is negative 1084. So once you come over here, 1051, there you go. You've broken it. You've moved above that line, and that becomes usually a buy configuration at that point. In this particular case, you do actually have the green over the red, and in this particular case, orange just dipping, and cyan has moved below 0, and boom, right at the end of the day, nice clean buy signal. That's pretty much what it does. It's pretty straightforward, but it's looking good. You know, once we refine some of these, when we get into what seems to happen is when we get into a stall area where it's pretty flat, you tend to get a few more of the magenta candles in there. They come in because what happens is you get a flat lining of the DOC red, usually at a particular zone level, and then you just get a bunch of noise going back and forth. And then you look at the shakeout readings, and you can kind of see it. You're slightly down, you're slightly up and down, up and up. Yeah, and that's what you get, kind of muck. And it was so slow. But get used to that beautiful volatility from before. But that's okay. It is what it is. The irony is that's a 5K chart, but it's not even programmed for that. It was intended for the much broader 50K, which isn't even allowed to put in a magenta candle until it breaks the 76% Fibonacci, or in our case Morganacci, because actual Fibonacci would not match. And that's always going to be a little late, but what that does is it provides the biggest run capabilities that you're going to see from those setups. So you're going to end up with a little bit late, which means you have to be a little more defensive on the short side at the beginning with ones like this where they just dip a little bit. In this particular case, I wouldn't call it a little dip, because even from that 76, you move us to the 50%. It's not horrible. It's not super duper either. 76 was at 79, and it drops to 60. So, you know, if you consider 15 or 17 points pathetic, then okay. Yeah, it's not the same as these 100 plus runs, but again, you have to take what the market's giving you. The market volatility has slowed down dramatically right now because there's a lot of uncertainty in the unfolding, which means I think that some positions are just being reallocated because we're seeing a lot of stabilization across key points. And I think that, well, in this case, it looks like they're trying to build for a breakout. Whether they'll get it or not, we're going to find out, because they're getting pretty darn close. Using the after hours here to move up to back to the 26 should give them enough impetus to push that. The fact that even in the pre-market they can't seem to close above it is really interesting, because every time I've seen it, they get to the 95.50 plus range. Amazing amount of volume on the short side or selling side pops in. So we'll just go with what the readings give us, and we'll continue to plug away. And when I get this one just a little bit further along, I'll definitely send it out, give you an option to use. Because as we were talking, if you compared, let me take it down. I'm going to go back to this one. If we just remove the GAM function, it's a big difference in the consistency that you see going down. The buy ends up being the same from a yellow candle, but you don't end up with some of the noise ones that don't quite give you the best option. And of course, I should add the DOC rising to this one. It's just helpful because then you just don't have to look down at the extreme, and you don't even have to have it on your screen. You really could get by with just your shakeout and DOC, and you would really have everything. And in this particular case, you're not even going to need that because all of the criteria functions for the paint mark are pre-established. I mean, you can kind of follow color-wise the breakdown, and it starts right here before the shakeout. When it's positive, it's broken down already, and then the turnaround as the shakeout turns to the positive side. And even more so quicker here when you're in the deep red and you get the buy signal turnaround. That happens even before the shakeout's able to do it. So, as always though, trade well, and I will keep putting up charts as they're relevant. Have a good one.